Do I need to do hair and makeup? I forgot.
No,
You
you're covered.
you definitely look the best out of all of us, so there's nothing to worry about there. All right, everybody. Good morning, everybody, and welcome to the Toronto Real Estate Show. Hello,
Beautiful.
Mr. TK.
Hey Darryl, we got some nice guests today. This is great.
Yes.
No more lonely podcasts for us.
No more lonely podcasts. We have the privilege of having two fine gentlemen here, Mr. Jeremiah.shamess and Kenny Myles.
Beautiful.
Myles Kenny.
Yeah.
Welcome,
Don't worry,
guys.
you're not the first one to make that mistake.
I'm reading it off of your screen here for some reason. Like I don't know you already.
You've known us long enough. You should know my first name.
You would think, right? I'm nervous. We're
He's got
live.
a lot of noise in his head. It's hard for him to
There
keep track of
is
things.
so much noise in this head. It is absolutely ridiculous. Absolutely ridiculous. It's my first time meeting these guys. I want to introduce them. Jeremiah, along with Mr. Myles here, leads a middle market investment sales team based in downtown Toronto. They help owners maximize the value of their commercial real estate assets with annual transactions averaging $230+ million. Holy cow, these guys are heavy.
They're selling
hitters.
everything. The whole city.
There is a heavy emphasis on redevelopment land for residential as well as office buildings and retail properties in the GTA and downtown Hamilton specifically.
The good old hammer.
These guys are beasts. I have the pleasure of knowing them through business and doing some, almost 2 deals. Next month it'll be technically 2 deals with them.
That's right.
They are a pleasure to deal with on some days.
Thanks, Darryl. You're great to deal with as well.
Yeah.
When are we able to tell the story about the tail between the legs?
I think he needs another month or so.
Damn you! No, hey, when why wait? Why wait? You want to tell it or should I?
I feel like you should, but
I will tell it. So I bought a piece of land from these fine gentlemen out on Kingston Road, the one that I'm always complaining I haven't got a pre-consultation meeting on. And they also were able to procure the neighboring property for us. And then, like a group of idiots, we went with one of our partner's cousins to list the property. And that did not work out the way we had envisioned. And unfortunately for me, I had to call these fine gentlemen and, with my tail between my legs and ask them if they would forgive me and come back and work with me again. And actually the phone call, I was planning on sending them an actual picture of me with a tail between my legs from my wife's Halloween costume. But I think it was enough to just go in there to suck a little butt. But
And what'd they say? Did they accept, or were they just like, I'm not interested?
Let's see how they bury me on this show.
I hung up immediately. So
yeah, that's right.
Yeah, enough's
Listen,
enough.
you don't sell
Feelings were hurt.
$230 million worth of real estate by being offended by some guy like me.
Agreed.
It was more along the lines of, we welcome you back with warm arms.
With
They were
warm arms.
You finally made the right
Lukewarm.
decision, Darryl.
That's right. Finally. Hey, listen, if you talk to my wife, it does generally take me quite a while to make the right decision. I generally do not learn the first time round. But it's good.
Wow.
Listen, I have a sign on my board here. It says, mistakes are evidence that you're trying.
There's no doubt about that. We've all made many mistakes, and that's how we learn.
I make more mistakes than I make the right decisions.
That's right. There is plenty of evidence of
motto.
me trying. That's for damn sure.
Yeah.
Is one of those mistakes working with Darryl, or
No, this has been so far one of the very few right decisions. So
That's right. That's right. I wouldn't call this work though. That's for damn sure. This is
that's true.
this
yeah,
is
being
fun.
friends with Darryl has been good. He teaches me a lot. So if you guys are his experts and he's my expert, then that shows how little I know. right? So I'm way down on the chain.
You don't want to be on the bottom of this totem pole. That's for damn sure.
So we actually learn a lot from Darryl, and I would say it's doing deals with Darryl is a constant entertainment of roller coaster up and down.
Perfect. Good. All right. So our relationships are very similar.
That's right.
Yes.
There is no standard box around here.
Yeah.
No, there isn't. I think we both shoot it straight, and that's what we really appreciate about one another is we actually are telling the truth and telling it like it is.
It's very, very hard to find. Very rare.
Yeah.
So
you're the most direct person we know, Darryl. It's a good thing.
You know what? I mean, it to my detriment sometimes and to my benefit sometimes, right? I mean, there's very few people that like to hear the truth, including me. Right? So anyways, I think we've got that out of our systems now, so thank you. Appreciate that. There is a lot of stuff to talk about. This market is bananas. It's very hard for us as quasi-experts to have any idea what's going on out there, and that's why we like to add pseudo-professional. I mean, you can tell by our studio and TK's background right now flickering that we are at the top of the professional food chain.
Yeah, well, we're getting a really good deal on commercial leases right now. We got some great office space downtown, right? So we figured we'd upgrade during the pandemic for the show. Well, we're in the studio right now.
That's a great segue because Jeremiah likes to tweet, and he sent out a tweet. I think it was last night. I don't know. Maybe I saw it this morning, last night, about having, I guess a gigantic investor who is excited about the Toronto office market. Do you want to talk about that a little bit?
Well, it's not so much that he was excited about that. He's a global investor, so he actually invests all over the world, primarily focused on office, Class A, core plus stuff. And their thought was that they're bullish on office coming back. They think the settling of absorption of the new tenancies, more or less getting rid of the office space they need and don't need in the post-pandemic world, will not be nearly as bad as what people think. So they've been quite aggressive in trying to acquire properties, but not so much aggressive on pricing. And specifically, the two type of assets that they're looking at is single tenant office buildings have actually become more attractive versus multi-tenant office buildings. And it's a little bit funny because, I mean, he's playing in much larger realms, like they're investing, probably a minimum equity check of 100 million plus. Whereas we work in the middle market here in Toronto, and we actually sold an office building in downtown Mississauga in the middle of the pandemic. And it was a 94% leased office building with a whole bunch of different tenancies. So it was a multi-tenant building, and it sold at a 5.75 cap, which arguably you would say pre-pandemic is the same price. So it was pretty funny to see that certain smaller private investors are taking a very long viewpoint on what's happening in the pandemic, and they don't particularly believe that this will have a lasting effect, I guess, to the detriment of where most people are taking it to the extremes, like the death of the office, which we just simply don't believe. We think there will be probably a 10 to 15% change in the occupancy of certain different or certain tenancies, but it's never going to go to the extreme that everyone else is thinking of. So basically the comment that you were talking about, Darryl, this fellow investing in office around the world, they're still going to continue to do so. Single tenant office, more so than multi-tenant office. They're seeing not a lot of landlords willing to drop their price yet. So it's probably too early to tell truly about the global office market. But so far here in the middle market in Toronto, we're not seeing a ton of movement other than maybe 25 basis point drop in increase in cap rates.
Can I get an example of what a single tenant office building is? I'm trying to picture that. What's a single tenant office building? How big is that building?
Well, I mean, it could be 20,000 square feet. It could be 50,000 square feet. It could be 200,000 square feet. I mean, I can give you a couple of examples. Myles and I sold an office building in Rosedale that was a single tenant office building. It was 10,000 square feet on the land parcel with a parking lot, very small. And then the other one we sold in Mississauga was 50,000 square feet with about 12 different tenancies. And so, these are middle market office buildings, but if you take, for example, Google just took a massive lease in a private equity owned office building that's just being built downtown East. And they are taking pretty much the entire building. I believe, Myles, maybe you know a little more specifics on this, but I think it's almost 400,000 square feet on King Street East. And that's a single tenant office building. And that's much more attractive to global investors that we were on the phone with than say multi-tenant right now, because they can hone in on the risk of the tenancy and the covenant. So they basically are going to do a full study on the tenant and what their potential is in the long term to actually pay rent. And it's a lot easier to do when you have one tenant and you can understand their business, whereas you have 10 to 20, or in something like Brookfield Place, you have almost 100 different tenancies to actually bifurcate your risk profile.
Okay, so they're not all just like the small buildings in Rosedale that you sold. These could be 10, 15, 20-story buildings.
Yeah, exactly. I mean, if you look at the financial core, most of the office buildings there, TD Center, Brookfield Place, actually a good example is CIBC Square, which is just being finished and built. If we were in the office, you could see it behind us because we're in Brookfield and it's right behind us. But CIBC was going to take, I believe, 1.4 million square feet. So there's a massive single tenant office building that is owned by Hines and a pension fund together that, would have a lot less risk than say another building, because someone's just looking at CIBC as a tenant and they're going, what is their ability to pay rent? Obviously CIBC, prints about $2 billion without doing anything every year, because they're one of the chartered banks in Canada, right? So it's going to take a lot for a Canadian bank to actually, get into some serious trouble. And I think if that happens, we're all in a lot of trouble.
We are all in a lot of trouble. So we're looking at an article headline here. What will commercial real estate look like in 2021? Myles, what do you think?
Well, I think commercial real estate in 2021 really depends on when the vaccine is going to come. Like, as long as the vaccine doesn't come in place and we're in lockdown, only essential services are going to be occupying their office space. If you just look at groups like Colliers, going into Brookfield, it's very depressing walking around in the path where we're one of maybe a few tenants that are occupying their office space. But there's still groups like in the tech sector. I've heard stories of groups that are in 5,000 square feet that they're not occupying their space, but they're continuing to grow, and they're looking for 25 to 30,000 square feet for when their employees do come back into the workspace. So
yeah. Weren't there a couple of just recent announcements of tech companies taking more space on their, like, didn't Shopify just commit to more space? And who was the other one? Was it Amazon? Right. Amazon and Shopify just committed to more space in downtown Toronto, right? I mean,
exactly.
So that's interesting. I mean, the next article I wanted to bring up is RBC. Majority of Canadians want to work from home, and it will change cities. What do you guys think about this?
Well, that's a good question, but I think primarily people are getting fatigue in sitting inside and not being able to interact with their different employees. So our whole team is in the office every day. We're probably an extreme version of that. I do think that the truth is somewhere in the middle. People certainly will want the freedom to work from home, especially people with families where they have to deal with their children, or they have to deal with, say, they have an elderly one living with them. I think there definitely will be a settling of what people are thinking. But two interesting anecdotes on the phone with the senior level bank executive, and they were saying that they were moving their office space down to about 140 square feet per person. They're actually moving back up to the early 2000s, late 90s metrics of about 240 square feet per person. So they're actually not going to get rid of any of their office space. They're just giving people more space. And so what they're doing is they're starting to change the interaction of the office back to what it traditionally was. The only difference now is that instead of coming into the office 5 days a week, you'll have a rotational shift perhaps, or you'll have hoteling stations where I'm going to come in Tuesday to Thursday, and on Monday to Friday, I'm going to work from home because I have to deal with my kids. I have to deal with my elderly mother who lives with me. And I have to be able to be at home to deal with those things and have some flexibility. And I'll still get my work done, but it will change the amount of time I'm in the office. And the other anecdote I heard is that another major landlord in Midtown Toronto just had 2 offers to lease at 30,000 square feet, that's 60,000 feet, growing new tenancies, Midtown. And, they're in a sense, not your traditional tech type tenancy. They're, again, more of a traditional office tenant. So again, they're taking the standpoint that they believe they're going to need some office space in the future. They're just, call it, right sizing what that office space may be.
Beautiful. Yeah, that's what we're seeing too. I think that's on our show. We've been talking about that a lot, is productivity levels. We don't know what those are like yet. In-office collaboration. Like, there's so much info that these companies need to see how working from home is affecting their business overall. And I don't think it's going to be as easy as just working from home and everything's going to be okay. I think a lot of businesses are going to need people in the office together. What are the reasons you guys are working together at the office right now?
The biggest thing is collaboration, and we're able to bounce ideas off of one another. We're working on multiple transactions at a time. So really just having that collaboration is key to driving success for our team.
Yeah, I mean, I think physical interaction, is irreplaceable. There's no doubt about it. But I think it definitely does depend on the business, right? Like, for example, I mean, I have employees, none of them are local. You wouldn't know the difference other than the time zone, right? I mean, for all anybody knows, I'm in a basement in Cuba right now being held at gunpoint. Like, we just, we don't know where anybody is. Sometimes in some businesses, it really doesn't make a difference. But, I know for me, I've been in this house for a long time, and I could really use some external interaction that felt safe, right? There's periods where I don't need it, but then every once in a while that feeling creeps in where it's like, okay, like, I gotta get an office. This is just it's enough already, right? And so, but it's that healthy combination that I agree with Jeremiah. I think we're going to see a shift in how it works. People will definitely need the office space, there's no doubt, and there will definitely be a multitude of tech companies that will take on a lot of this office space. We'll probably see a lot of manufacturing come back local, and those people are going to need head offices and more offices. But it's definitely not going to be straightforward, like yes office or yes work from home. It has to be a hybrid model for most businesses, I think. I mean, what the hell do I know?
The elevators can't support it, right?
It's
too early to tell how it's really going to be affected. Everyone keeps making these massive generalizations, but you have to remember that, things are going to settle and behaviors are going to shift, certainly, but no one really knows at this point, just like no one knows exactly what's going on with the virus. But another anecdote, we know our office leasing team at Colliers, they just did just under 30,000 square foot office lease with an animation studio on downtown East Side. And the animation studio, to our understanding, they have to be in the office talking to one another because they're coordinating these very specialized, very highly detailed animations. So they have to be able to understand what one person's working on, one aspect of a shot, and the other one's working on another aspect. They have to be able to talk very quickly. So it's much more efficient Whereas we're hearing other people who have ad agencies, they're like, we never have to go back to the office. Or my two sisters who are corporate lawyers doing, M&A work, again, same thing. They're like, we really don't have to be in the office more than 2 days a week when we talk on deal stuff, because they're just in the weeds on details, going over contracts, going over, highly detailed things where they need a lot of concentration to work. So who knows? But at this point, we think it'll be somewhere in the middle.
I think if you look at the screen here, Canada's economy has never been more dependent on real estate. And I think we will probably all agree, mainly because we all have a vested interest in agreeing. But I mean, this market's going to be nuts for a few years, right?
Yeah, we have in Toronto, we have what Myles and I like to say, the golden goose being fed by the golden feed. But essentially you have immigration, which Trudeau stated that there's going to be roughly 1.4 million people they're going to allow into the country in the next 3 years. Of course, after they're allowed to enter, which about 40% will actually come to the Greater Toronto area, and almost 50% will come to the Greater Golden Horseshoe. And then the other aspect is low interest rates. Do we think they're going anywhere in the near term? Probably not. So with those two aspects, that's really your golden goose that can continue to lay eggs, meaning that there's going to be massive demand. And then finally, what we call the golden feed is the fact that in the GTA, primarily, Hamilton's a different story, but we have the Greenbelt, and the Greenbelt has enacted geographical structures around where you can build and where you can't build. And so there is limited amounts of land, as Darryl knows very all too well when he is searching for new development land. There's not a lot of it. So this increases the price of land. It increases the price and the demand for product. And so therefore you have, kind of this, call it perfect storm almost, which is not really going to subside anytime soon. But we do, of course, want a healthy market, and we don't want a lot of people doing the, call it irrational buying that happened in 2017 to cause that little crash. But we don't see this changing, particularly in large amounts, rather, anytime soon, unless interest rates move.
Right. And I mean, the likelihood, I mean, even if they move, they're not even going to get above 3% for years. I mean, that would have to be a crazy move, and 3% is still friggin' low, right?
Exactly.
Like if you go up a quarter point every 6 months, look how long that's going to actually take to even get back to 3%. That's at least 2 years, right? No, that's 4 years.
Yeah.
That's insane. It's absolutely insane.
It is. There is examples of when you look back at World War II, when the interest rates started moving significantly in the 70s. Of course, we were not around for that, but things can always change pretty drastically. But at this point, the next 5 years, who knows? But we don't see them moving.
And I think there was a major difference between after World War II and now. I mean, back then, the dollar was tied to gold. Now it's tied to a keystroke, right? Like that's a significant difference. And we see that the powers that be have a vested interest in continually flooding the market with more and more money. Even as the interest rates go down, if they made money at this level of interest rate and this level of money, if the interest rate goes down but the money supply goes up, they're still making their trillions and trillions of dollars off of the interest, right? So there is a gigantic incentive to continually flood the market with money. So now, Myles, like what has to happen, even other than interest rates? Because even interest rates have room to move without doing much to the economy. What actually? So now we have a pandemic, right? A few years ago, we introduced, different taxes and different
stress tests,
and like, even if interest rates move 2% in the next couple of years, like, what the hell can stop this train right now?
Increase in capital gains. That's just going to really stall out the marketplace, and you're going to have owners that were thinking about selling that have a terrible fear of paying the tax man, and they will just hold on for dear life until they have to sell.
But that would kind of stall maybe the residential resale market. But then the prices of new stuff would probably go bananas, because I mean, it's not like people are going to stop coming here, right? So even, but I mean, that is a significant problem. I mean, if a whole let's say 20, even 10% of the resale market stops selling because of a capital gains, I mean, it's probably going to be more than that. But let's just say a significant portion. I mean, what is the fallout? TK, what happens if people stop buying houses? But there's still supply coming on from new.
People need housing. That's never going to change.
Never.
It's never. The only way that the market can change is to take away the capabilities of the buyers. You have to have some sort of restriction. So either economic, meaning they don't have the job, they don't have the ability to be able to pay their bills every month, or on the financial side, which is going to be interest rates or government policy. And I mean, they've already got so much, in place already. It's hard to say that the government's going to get involved more than they have. Interest rates will go up. I mean, inflation's a joke right now, what they're saying. Prices are going up. There's eventually going to be enough debt for the government to no longer have any more tools to be able to implement stimulus. And they're going to start selling bonds and having to raise interest rates to be able to get people to buy them. I mean, that's it. Eventually, the capabilities of buyers will be stunted. It's not going to happen this year. Too much going on for it to happen this year. But in the next few years, that has to change.
So I mean, 3 out of 4 of us, and actually TK lately has been working on more land deals. But I mean, with regards to land, I mean, there's a headline up here: the struggle to make Toronto real estate affordable. I have another article here where people are up in arms about a property downtown that they want to demolish. That's heritage. I mean, we deal with this kind of crap all the time. I mean, let's just take my site in particular as an example. I mean, it took me from October 5th to January 13th to have a pre-consultation meeting with the city. After I started the process in July, but in July they asked me for more information. So it took me a little bit of time to get them the information that they wanted, and then it took them a hell of a lot of time just to respond to me. And then once they responded to me on October 5th that in 5 days I will have a pre-consultation date, it took another 3 months to get the date. So between, we have all these people coming in, interest rates are low, people are moving out of the city, people want to get into the city. Even if we wanted to match the demand, right? Even all the developers are trying their hardest and all the agents are trying to sell them stuff and people want to sell. You have to deal with crap like this where, oh my God, you have to keep the facade of this old, ugly building that nobody gives a crap about except for 4 people on Twitter, right? Or, city staff is shorthanded in the middle of a pandemic while working from home and millions of people are out of work. Like, is this ever going to end? I mean, there was another article actually this week, where Ford is giving, a speech basically about removing red tape and blah, blah, blah. And everybody's going crazy on him because he's very pro-developer. And he's given like specific zoning, like to this site here on the screen in particular, they basically jumped the entire queue. But like, how are we ever going to catch up in this city when we're constantly dealing with all of this horse shit from the government while they're putting on the facade that they're, doing their best and they want to avoid crisis? That was a lot of questions.
Yeah. Where do we start? Yeah. I mean, we hear that all the time. The only thing I'd say is that, the city staff, and we deal with them quite a bit too, they certainly work extremely hard. They are overworked. I believe that Toronto has to hire more planners in order to deal with the volume that comes in. But on top of what you were mentioning, there needs to be a systemized process to create some efficiencies. And that would be very helpful if it could be a citywide zoning that would essentially allow as of right development to happen, because it's almost impossible for as of right development to happen in Toronto. The planners really never want to allow it. And every single site has to be negotiated over. So you can understand that right now there's roughly 300 development sites in the planning process right now as we speak. And because of that, that's 300 negotiations that are happening. And, you know, roughly it costs about $500,000 to $1 million to rezone each site. And, you know, if not more for some of the larger sites. So you have this archaic system where each site has to be negotiated, time has to go in, money, and as you know, Darryl, this you can't get an answer from the city very quickly because, you know, they're already so busy with other work. So how do you exactly fix that? I think they really just have to make as of right zoning and bring it up to a modern shift as where Toronto is today. Because I mean, look at 2020 Toronto as compared to 2000 Toronto, drastically different cities, drastically different. And, you know, now we have no more parking lots downtown. Now people are assembling land. You know, we're selling a site right now. It's 28 homes assembled together to make a tower site, right? It's very difficult to do that. So in order to actually complete some of the efficiencies on the planning process, you need to have one large zoning bylaw and shift it to allow as of right development. So just like New York City, you know what your height is. And if you don't have a certain height, you can grab density from a site next door, the air rights sale, and be able to build a site and know what you're going to build and know the effect to it.
Darryl's talked about that. So just for me and other listeners who aren't familiar with that, you're just saying have a set of guidelines. As long as you fall within those guidelines, you're going to feel confident to push forward. But because they know that there still could be a lot of negotiations, these developers aren't pushing forward and they're not willing to put their money because they know that the city may not approve, even though it does meet the guidelines. Is that right?
Darryl, I think you should comment on that because you're going through it.
Well, okay. The crazy part about this discussion is there are the set of guidelines. They have tall building guidelines, mid-rise building guidelines, right? They have the official plan and they have the provincial plan. And all of these things combine to tell you exactly what you should be allowed to build on your property. And if you just follow those guidelines, it should be very simple. So for example, on the deal that me and these gentlemen are working on Kingston Road, it's super simple. And we designed a building that fits exactly within the guidelines. There should have been nothing that they could have said, but apparently they are allowed to pull rules out of their butts and try and make them stick.
How do you really feel?
But it's
that's the problem, Darryl, is their guidelines. And that's exactly what I was meaning, TK, is that, you know, Myles and I deal with this so constantly that we feel as though if there was a set of rules in place that would allow you to build within this box, just go ahead, then you'd have a lot of development move much quicker. And the primary focus of this argument is not so much on the tower site, because we understand in a tower site, you're really changing a lot. You're adding a lot of shadows in some spec. Okay, sure. You know, we can talk about that after. But the mid-rise building, this is the most affordable, most pragmatic set of housing in the city of Toronto today. And the reason is it's very livable. Like, I live in something that you would be considered a mid-rise, and it's something that is along the main avenues of the city, which TK, to the listeners, the city of Toronto official plan defines avenues as, for example, Queen Street, Dundas, College, some of these commuter east-west roads that are not high-rise areas, but have neighborhoods behind them, but are still very busy, high voluminous areas. Kingston Road is another one. if they would allow mid-rise to be built in these avenue areas and allow an as of right 8 to 10 to 12 story building with very, very minimal parking, because no one parks or no one drives nearly as much anymore, this would speed up massively the amount of mid-rise buildings that can get built around the city, which is a very usable, pragmatic set of housing for people who can actually afford it, right? Because they have to get into a condo that is, say, 500 to 1,000 square feet at, say, $800 to $1,200 a square foot. It's much less expensive than you're buying the homes in the back that are, $1.5 to $2.5 million. So this is really what we're big advocates of. And, obviously we're not planners. We have a planner on our team actually, but we do understand there's more to this in the details, but we would hope that there can be this comprehensive zoning review that would allow for modernizing of these actual rules and creating the little subjective tiers of guidelines that Darryl's speaking about.
So Myles, like, what is stopping? I mean, we're not the first group of people to have this discussion and to have this belief. It's probably been going on since the 60s or 70s. Like, Myles, what the hell is stopping them from being willing to do this?
Well, like Jeremiah was saying earlier, just the city is severely understaffed, all the local planners. And then it's also just bureaucracies and political aspects. If you look at chief planners, they're not in there for 10 plus years. They're constantly rotating. So you have these new ideas, these new philosophies that these chief planners are looking at. So they have different priorities. So it essentially stalls what we're trying to discuss and move forward. So that's where we see some of the challenges. Like if you look at Greg Lintern, he's doing a great job. One of his main focuses is pushing the missing middle marketplace, adding more mid-rise developments throughout the city. But again, that takes time and processes to push forward.
But wasn't Keesmaat an advocate of that as well? Like for years? Like hasn't every chief planner been an advocate of, that missing middle and pushing it through quicker? Like what the hell's going on? It's crazy.
It doesn't work that way, actually. I would recommend everyone to go follow a fellow named Planner Sean on Twitter, actually, because he deals with this missing middle planning procedures constantly. He's at the Committee of Adjustment, and you see the effect of what's happening. Someone goes in to build a 3-plex, a 4-plex, 5-plex, something in that kind of smaller housing program. It's almost as hard to get that zoned as it is a high-rise building, and yet you can build these large mansions in these areas very easily, which obviously don't add any density, and they only really benefit to the existing homeowner. I say this actually owning a home like that, and so I think that really they need to actually allow that, and they have to an extent. They've allowed laneway housing, and now garden suites will be allowed in. That's a great missing middle program, but
we'll see.
It's a tiny fraction of the market, right? And most people don't want to build something else at the back of their property. That's just the reality. Like how many people actually want to build something at the back of their property?
Yeah, how many applications are out right now for laneway housing?
8.
That's a great question.
It's single digit.
Would be more. I don't know that because we don't trade that type of real estate, but Alex Sharp and Craig at Lanescape, who actually helped put that policy forward, those guys are doing this day in, day out. And I believe that last time I spoke to them, it must have been somewhere around 100 homes that were in for this. They've been dealing with quite a few themselves. But that's not enough, right? There needs to be a lot more. And if you look at the R zoning in the city of Toronto, it's actually one of the best zonings to have if you have a house in what we call the neighborhood's official plan, which is, as we call it, the moniker is the yellow belt, because you really can't build more than 4 stories. But in at least, if you're allowed to build up to 4 stories and allow multiple units without charging massive development fees on each unit, you'd probably speed up the density parameters in these neighborhoods, right? Because it's too expensive. You build a 4-unit house, you're going to spend roughly up to almost $50,000 per unit, I think, is the development charge for these new units. So
Oh no, it's way more than that, bud.
well, it's 50 or 60,000 per unit to add in, and that's where you're going to get this economic sense that won't work, right? Because you're like, well, I want to build a fourplex, but it's going to cost me $240,000 to add in the additional units there. Well, if on top of the existing units, right? Because you don't get charged for how many are on site. So there's little things like economic sense, and there's little things like these planning paradigms that these hoops you have to jump through. And it's all slowing down development. It's not adding density in these neighborhoods. And it's therefore pushing people to go to condos, pushing people to go to mid-rise. And of course, as Darryl knows, it's hard to find that land and it's hard to build those buildings too. So there's a big plug in the system and the demand outweighs the supply.
So go
ahead, Darryl.
What's going to happen when they do open up the floodgates, like when the borders open again? Like we can't build enough. Yes, rents are down in downtown Toronto for the next few months at the most. What are the prices going to look like at the end of 2021 in the condo market that like really didn't miss a beat, even though sales were down for a little bit? Now sales are crazy in the condo market again, but new construction condos by the end of 2021, the prices continued through the pandemic. When the borders open again, like what is that going to look like? Because there's not that much inventory coming online because the pandemic slowed down the application process, slowed down all the construction projects. Right now, what's the average price in Toronto for a condo?
So with immigrants, though, like majority of them, the first 3 years are renting. I know people come with money. There's lots of people who come from overseas, but you're looking at about a traditional immigration migration will be from a condo or apartment into low rise eventually after 3 years. So right now, I think the rental market, it's almost like a blessing because it's been so there's been such a high vacancy rate and prices obviously down 20%. So it's been understimulated. I think now with immigration, that'll help with the rental situation. My biggest concern is, and maybe you guys can look at this, is the Federation of Rental Housing Providers, when they talked about 20,000 units short based on the immigration and everything else that we had from 2019. Are we seeing more rental buildings now? Like when you guys are talking to your clients and developers, are they looking at, should I build a condo or should I build a purpose-built rental? Have you seen a switch in that over the last year or two?
100%. We're actually in the market right now with a forward sale, a 90-unit rental building that will be built. And then 2 other sites, we're selling large sites, actually around 300,000 square feet. And some of the bidders that we haven't had an offer date yet, but when they bid, will probably be rental builders. So it's definitely happening a lot more. And especially now with the fact that it's harder to find the right type of product for a condo. People are starting to look at this and starting to think, as a developer, I would rather hold onto a property in the next 10, 20 years in a location that I can't actually find the exact same location again. Probably, they're taking a probability standpoint, but I really think that it's going to happen more. But one thing that Darryl said earlier was, this massive amount of demand, everyone wants to own homes. I think part of that is that Canadians in general, minus Quebec, owning a home is a very big cultural standpoint. I believe the last stats were somewhere around 65%, whereas I think in Quebec, it's closer to 40% ownership. When that culture starts to shift from an owning standpoint to a renting standpoint, then you'll really see the rental builders move fairly quickly on providing that product. But right now, it's still only about 15 to 20% of the entire development market.
Well, and we read an article a couple weeks ago, that was talking about the amount of rental applications in for new construction now. And I think it was like a total of 7,000 units, but it's spread out over, they're in the application process. Like God only knows when those are actually going to hit the market, right? And right.
Yeah.
So there's no way that we're gonna, and the incentives are just not there to build rental like they used to be. I mean, the only incentive that I know about now is like some really, really cheap money, but even that cheap money, I think, was at 1.25%. It's not even that cheap anymore when you can get a residential mortgage at 1.6%.
Myles, actually, you should tell them about our friend over on the east side who really wanted to build a building, but he had to work through CMHC. I think you know what I'm talking about, south of Maine.
Yeah, so this site is on the northeast corner at Main and Kingston Road. So this client of ours, really great guy. He was a small-time builder. He's only built detached houses. He's done a few like 3-4 unit multi-res buildings, and he really wanted to take the next step up. So he ended up assembling a piece of land over on Kingston Road in Maine, and I believe it's around 75 units that he's building, and they're under construction right now. And like Jeremiah was saying, he had to leverage himself with all of his other assets and then use CMHC financing to put together the deal. And then also they're doing rental affordable units as well to help create some incentives.
Is that through the city or CMHC?
Through the city, the open door program.
Mm-hmm. Nice. So it's working.
It is to a sense, yeah.
Yeah.
CMHC has a great financing program for affordable and mid-market, median market units, and they will essentially give you almost all of your construction financing, so you have minimal equity in, but there still is some equity requirements. You have to have 80% of your trades fixed costs, right? Because they're giving you a certain amount of money. They don't want an increase in cost. But it's certainly a great program. And actually, that's a good segue into something. I don't know how much time we have, but to talk about the increase of construction costs. This is a massive problem.
Oh my God.
Affordability issue in the city. And this is something that I personally have really hard time understanding. And I don't want to push the trades as the bad people here, but the unions are so strong in the city that it seems as though there's no leeway for the demand that comes in. And so they have to protect their workers and they have to control the cost in. So there's this massive shortage labor for skilled trades, but also in the city of Toronto, there's certain trades that won't allow in competition from external areas. And to my knowledge, this is causing a massive increase in pricing. I mean, construction costs are almost going up 20 to 30% year over year in some cases. And there's one cost consultant that we were listening to, it was last year or something, but they were saying that they believe this will continue to happen for the next 3 to 4 years until there is a massive influx of skilled trades. So that's a program that the province could actually start to do very, very easily by allowing some sort of quick access, accelerated program for all new immigrants coming in or for current Canadians here to allow for skilled trade programming. And I think they are doing a program like this, but this is the crux of the issue when it comes to construction costs. There's this massive increase every year, and it's really causing, again, an affordability issue, because of course the developers still need to make their X return because the banks still need to finance them. And the high net worth individuals and the pension funds that are actually funding the developers aren't going to take less of a return, because if they were going to take less of a return, they would just go look at different investments, like equities. It's all about where can they get this return? They're going to search for it no matter what. So until that happens, you're not actually going to have the developers take this cost, and therefore the investors, the pension funds, and the banks. So you have to decrease the cost somehow and at least bring it back to maybe, 10% below would be great, or even close to 5% for a regular market. But this is a massive issue, and we look at it daily.
Listen, just on our project on Kingston Road, forget about construction costs. Development costs are about $500,000 for just the application fee. Forget about permits. Just to apply for a permit is $500,000. Over a project of this size, it's over $1,000 per unit that I'm not just going to eat. No other developer is going to eat. That gets passed on to the end user, right? Just like you're saying. So
well, I think it's the problem that you have to say, like, everyone does need to make a return to a sense, but banks aren't going to finance you when you don't have a proper return.
Sure.
So you won't actually build the product if you don't build in a proper return. So
sure.
I think there's a lot of misconstrued conceptions there that developers are greedy and are trying to take every profit dollar available. Yes, of course, they're going to push the envelope, but in our experience, Myles, correct me if I'm wrong here, but everyone's trying to reach the price. They're
exactly
at 10%, and they're just trying to get to that 15% return.
Myles, what does that mean? Reach the price.
So well, essentially, they're already pricing out in the future.
What do you mean?
Yeah.
So essentially
that they're trying to hit a certain margin on the development program, and the landowners have been approached by 5, 10, 15 different developers off market, right? Say this is not in a system where we're taking doing a modified bid tender and representing the ownership group. This is just an off market case. So the owner of the property has a piece of land that he's not going to develop, and he's been approached by 10, 15, 20 people. He's getting called weekly, right? So he doesn't really know what the pricing is of his land. And that's, where we actually come in and help educate and value the land. But until that happens, he's just asking for more and more money for the site because maybe he doesn't really want to sell. And so in effect, he's just asking for more until he thinks that it's just some crazy number. And because of that, developers are having to reach to hit those margins. So it's this massive cycle that is turning around from the high construction costs, the high land prices, to the developers trying to hit a certain margin and trying to reach to hit that margin so that the banks will actually finance their project. And this cycle continues to repeat itself. And as you mentioned, the cost to actually develop on the soft cost side, the levies, the taxes from the city, those are increasing as well because their costs are increasing. And this all comes down to the demand and supply of the product in the market. Again, if there was way more supply, then there would be way more competition, and all these developers would have to compete against each other, and they would start lowering their costs, and the banks would start lowering their return metrics. The construction companies would be getting less and less projects. For each construction company, there'd be so much demand, so they'd have to decrease their costs. So in turn, you'd have this massive decrease that would in turn at least subside pricing or maybe even decrease it. I'm not sure, but at this point, the average condo is $1,044 a square foot, I think, and new launches are at almost $1,300 a square foot.
Where's this, in the core or GTA?
New launches this past year in the city of Toronto was just under $1,300 a square foot. New launches in the 905 region was $915 a square foot. And then, so the average selling price for condos last year in a quarter, it was still up about 4%, not drastically, but was just over $1,000 a square foot. And there was probably something Myles and I watch very closely is the unsold inventory, because that really shows where the market is going. It's a little, call it crystal ball into where people are going, because developers will always price their unsold inventory just a tiny bit higher than the market so that they don't really have to sell it because they've hit their sales metric in order to get their construction financing. So it's a product that they may want to hold on to. And that product has actually decreased. So the market is gobbling up unsold inventory, and it declined last year, I think 4% year over year to about 12,000 units or so, which is about almost 10% below the 10-year average. Wow. So the inventory is actually decreasing, like you said. pricing's not going to get better. Everyone thinks there's going to be this big crash. It's not going to happen until the interest rates, until the inventory, till the immigration stop. I mean, that's what we believe anyways.
That's why we have you on the show, right? That's what it is. I mean, it's Toronto. It's a great city. There's so many opportunities here, and there's just not enough places to go around. And that's what we're seeing on all fronts. Not just like condos now are going to start taking a little bit of steam out of the freehold market, even though the freehold market's the lowest inventory ever. And this is all across North America. I was in a nice mastermind this week. Every major city in North America is dealing with the same thing. Record low inventories in December. Sales are just increasing. So everybody's got this same issue, and those prices are going to get out of hand. And what are your options? Your options are you have to go into the condo market. You know, like you have no choice as an end user with a $600,000 to $800,000 budget. What are you going to buy? Right? You're buying a condo.
And all of these cities that are dealing with the same issue are also not allowing immigration in or anywhere close to levels from 12 months ago. So when the world kind of opens up again, it's going to be crazy.
Well, there's going to be a bit of a delay, though, we believe, which has happened already because of the immigration levels being decreased for a slight amount. But the condo market is a very slow moving market. So the changes you see now happened 2 to 3 years before. I think, the right number is around 18 to 24 months because, as Darryl knows, it takes 18 to 24 months to rezone your property. And then it takes another 36 to 40 months to actually build the building. So when you've actually pre-sold your property, it's not actually coming online for 3 years. So all these changes are extremely slow because they really just take a lot of time and they don't come in place until then. So whereas the immigration, people move here and they're like, I need a house today. Where am I going to live?
No, and listen, there's investors who will snatch up everything ahead of those renters, right? So, I mean, even if the immigrants coming in are going to be renters for 2-3 years before they can put together a down payment for something, somebody's buying the units because, I mean, I'm not looking at the most brilliant panel of guys right here, but the writing is on the wall. It doesn't take a genius to figure this out. Right? It takes some weird outside freaky incident to make this thing slow down. Very, very irregularly is there a local issue that slows down the Toronto real estate market, right?
You mean the pandemic?
Well, I mean, who would have thought, right?
Well, that's when you look at it. Actually, another good guy for the listeners to watch is Ben Myers on Twitter. He's an analyst. He follows closely the stats in the market, and reading his last report, the rents in downtown Toronto were down, I think 11%, and in some cases almost 20%. So you have a lot of condos actually stopping to be in demand in the financial core, specifically entertainment district, downtown east, downtown north, midtown. So this has actually caused a bit of some leeway in this market. Resale condos as well, they are not nearly in as demand. So they've actually decreased in pricing too. It's a nice little breather in a market that seems to continually chug along nonstop. That, like you were saying, Darryl, no one here wants a bubble market to happen. We want a balanced market to happen. So this little bright spot right now, I mean, if you look at it, it's probably an opportunity to buy product at a more affordable price. I know my sister, for one, was able to rent a unit downtown at, it was, I think, $1,650 a square foot, or $650 a month, which today would be the same price as her older sister who rented in 2017 for the same type of unit. And just before the pandemic, that same unit was around $2,300, $2,200. So it's a nice little bright spot to actually make the market more affordable. It was necessary. Is it going to happen again? I don't know.
It's a
and they're
very
giving incentives too. Free months rent.
TVs.
Yeah, and then they're also giving moving costs allowance. Like, we've never seen that before.
No, and listen, you're not going to see it for very long. This window of opportunity is going to be very, very short. And it may get better in the short term, but once it starts going back up, there's nothing that's going to stop this train. There's going to be people on the streets with signs saying like, I need somewhere to live. I need somewhere to live. And they're going to go to Hamilton, or they're going to go to Barrie, or they're going to go to Newmarket in a mid-rise, for God's sakes, right? Wherever there's a GO station, Stouffville.
We're big fans of Hamilton, by the way. It's a great city. It's actually growing. It's got an urban fabric. It's got really nice areas to live in outside. We've got an office building for sale there. We've got 2 pieces of land there for sale, and a retail property too. I mean, we watch that market very closely. I think it's one to watch. I think that it has this old moniker as a steel city, but it's going to be good in the future. That's my little Hamilton plug. I like that city.
Awesome. Well, guys, it was a pleasure talking to both of you today. We really appreciate that you came on the show. We are out of time, but it seems to me that we should have a part 2. So we would love to have you on the show again, maybe in a couple of months. We'll book you on if you guys would be willing to do so. I think everybody must have got a lot out of that. I know I definitely did. You guys are a pleasure to work with. It was a great discussion. Thank you so much for joining us. Anybody have any last words before I hit the button over here?
No, I just want to say thanks again, Darryl and TK, for having us on, and we'd love to have a part 2 to this. So
awesome. We'd love to have you.
Thank you very much, Darryl, TK, and certainly, we are brokers. Information is our product. So if anyone wants to reach out to us, I'm on Twitter at @shamess and Instagram. And then Myles and I are on collierscanada.com if you ever want to reach out to us and ask any questions about the market. Certainly all we do is talk about the market. So we appreciate that time speaking today with Darryl and TK, and we look forward to the next one.
We will.
The next one will be after Kingston Road is sold. We can tell the whole story beginning to end, right?
Hopefully. Yeah, that would be great.
Good.
So
I got confidence in you guys.
We will post your contact information in the description below. So anybody that's interested in speaking with these fine gentlemen, that's where you'll be able to find their contact information. Thanks as always. Happy Sunday, everybody. And we will talk to you soon.